you can hear me, just type PS in the chat. Beautiful, beautiful. Thank you. All right, we'll get started here in the next 5 minutes and keep it nice and simple and easy for you guys for today. How's your day today? Did you guys have a good day today? Started off shit for me, but managed to come out nice in the end. All right. So today's class is supposed to be, you know, the journey of the trader, enjoying the journey. But I kind of want to do a recap on the market, basically recap some of the trades we took today in the market, why we took them, and kind of give you an overview breakdown of the range we're trading in. And after that, I kind of want to show you guys how I created the watch list this week, and you know why I was watching certain stuff, and then we'll do some questions about everything else. Are you based in Qatar? No, I'm actually in the United States right now. I'm in Washington, D.C. Okay, I'll get started here. Just give it a few more minutes and we'll get started. Only for the World Cup? Oh, I was in Kuwait. I'm from Kuwait, so I move back and forth depending on the weather I feel like staying in. The weather's so hot right now. I don't feel like go over there is like it'll bake in the sun. So that's the reason I'm in the United States right now. I like to go there in the winter. It's not too cold. In the summer, it's just too hot. Too hot to handle. Hey. Mish Palestine. All right, let's see, 20 people, 2 minutes. We'll get started in 2 minutes. We'll get started in 2 minutes and then we'll go from there. So. Canada تعذرني إن شاء الله. For people who don't understand what he's saying, he's typing in English Arabic slang. He's pretty much saying he's in Canada, come visit me. I need a visa to go to Canada. All right, we'll get started here. Beautiful, 25 people. 1 more minute. We give you Yalla 1 more minute. So before I start anything, is there a questions tab where you guys can type questions, or is it only chat? Do you see guys do you guys see a questions tab on here? Like a fade, there you go. Thank you, brother. Is there a questions tab, like where you can ask questions? So if you need to ask me a question, I can answer. Is it Breezy here? Where's Breezy? Breezy. Yo, Breezy, if you're here, just send a message or talk. Is this you from Kyle's iPhone? Not sure why Kyle's iPhone can talk. All right, beautiful. Mute all. Allow participants to unmute the sound. Okay. All right. If you have any questions, just drop them in the chat. I'll try my best to answer as much as I can. So before I start, I was told if I could pretty much explain today's trades, and also if I could explain the watch list that I posted this weekend and why I posted it. So I'm going to kind of just show you guys what I posted so you have an idea, and we'll go from there. So as you can see, don't switch. You guys can see my screen. Yeah. I'm not sure why my video cut off. Right, beautiful. So as you guys can see here on the watch list, we had Tesla, AMD, AI, Avco. We ended up trading Tesla the most. We traded AI. We had a lotto on Avco that failed, but we did not trade AMD, just was on our watch list. But the main thing I was kind of watching for coming into the day. Ooh. Sorry, my shit just keeps sound keeps going on and off for some reason. Should work now. Sorry about that. I'm not really sure what's going on, but I'll figure it out. All right, perfect. So I do want to talk about the Tesla, why I was kind of watching Tesla. As you can see here, I see strong bullish momentum on Friday, looking for a continuation as the trend breaks the daily chart. Weekly expected move currently at $11.30. Here are the levels posted, and highest open interest is 200C. Now, if we take a look at the chart when we look at Tesla, let's take a look here on a chart from a full perspective and just kind of analyze what's going on here with Tesla. So as you guys can see over here, looking at the daily chart, if you were to look at it, if there's no levels right in front of you, and you're simply just looking at the structure of the market, just give me 1 second. I don't know what's going on. I keep going back and forth. Just give me 1 second. Should work now. I disconnected and reconnected. Sorry about that. I have no idea what's happening. So if we take a look at the structure right in front of us, here, let's create a different drawing set. We'll call it webinar 1. If we're looking at the structure of Tesla's kind of daily candles on the chart, we can kind of look at the structure and we can tell that Tesla has kind of been making lower highs. And the idea behind taking the Tesla trade this week was on Monday, on Tuesday, as soon as we broke above and we held above the previous high level right here, which is 207, it technically kind of is breaking the trend. So that was kind of the main thing I was watching on Tesla this week, was this particular trend break that we had on the daily time frame. As you can see, lower high, lower high, lower high. Same thing with the lows keep getting lower. But at the same time, it kind of creates an opportunity once we kind of break out of that range, especially holding the previous high. So if you look here, the previous high on Tesla is currently 207.79. The reason I continue to hold and swing Tesla right here is because it's currently closing above, tested above. It didn't close above, but very close above previous high. And when it comes to the targets, especially if you look here, when we had our entry was this breakout level here, 198.57, which was the previous kind of rejection level right here on the daily. As soon as we kind of broke out and we held, you can see strong volume candles. It's at average, nothing above average just yet, but it's moved all the way from 198 all the way to 209 it saw today, before closing the day at 207.52. If you look at it in kind of after hours action, it's pretty much trying to hold this 207.79. We could potentially see a nice move up, especially if we break this 210 level. We could see a nice move up tomorrow all the way towards 214. But when we look at the daily chart, it looks good. When you want to take a trade, a breakout trade, you want to make sure the trend is breaking. The trend is not in favor. Like, for example, if Monday came, we rejected this level, and we started falling towards down, I'd be looking Tesla from a short position. I wouldn't be looking Tesla from a long position. When I'm looking at it from a long position, I'm looking at it because it broke the daily trend. And I mean, if you look at it on the 4-hour, you'll see the same thing. As soon as that trend breaks, you get a nice explosive move to the upside. Now, it's not explosive to the upside, but on Monday we did catch 100% on the calls. This morning we caught 25%. Had we held the contracts, we would have. They went all the way to like 300 or 400%. But these are good moves, especially as trend breaks right here, and tomorrow will be a good day for Tesla. Especially if we can hold this 207.8 level, you can see a pretty larger move towards the 214 target levels where we were rejected previously. And the end of the day, the main target will be this 217.79. because it is the last kind of lower high that the market presented for us. So Tesla, is been a stock, on watch this entire time. Now, two scenarios. I always look at multiple scenarios when I'm taking a trade. For this instance, I wasn't really interested in any short scenario unless we had a rejection of this 198 and we closed below it, marking another lower high. Then I would look for a short position. But as long as it's remaining here above 198, it's holding the trend, breaking the trend, you want to look for Tesla for, a larger move. And Tesla, can go, we have all the way to 400, it's still at 200 right here. Lots of moves potentially to be looked at it. Now, the other question I have is, why was I looking at AI? We traded this on Monday. Now, yes, I'm not going to sit here and sugarcoat anything. It was a 300% trade, 370% trade on AI. And I decided to hold them to earnings. Woke up this morning to minus 99%. But if you want to look at AI is the same setup as well. As you can see right here, why the breakout level was 34.68. It was the previous level where we rejected heavily. Now, when I'm looking at particular stocks, particular levels, a level where you see a large reaction. So, for example, you see it rejects 34.68. The next day, it drops all the way to $20. So it drops almost $14 as soon as it kind of rejects this level. So to me, this level is very important. Why did it reject? And why did it drop 14 points from this level? So it's a very strong, resistance. As you can see, as it sells off, you have a very decreased daily volume. The daily volume, shrinks all the way to 7 million shares traded. Nothing too crazy. And then right here is where my attention was caught. As you see, as we're pushing up and we're trying back at that 34 level, you see an aggressive increase in volume. It goes from 7 million to 42 million. And it's steadily increasing. And then on Friday and Thursday, Friday, and Wednesday, the volume goes from 50 million all the way to 100 million. And those options, we took the $40 call. We bought them at $1.95. They went all the way to $9. Unfortunately, today they opened up pretty bad because we had the earnings. Had there been no IV on earnings IV, these option contracts could have went nuclear even more. We were in the money almost by 3 points, 4 points on the $40 call. We also took the $50 call, from $2, they went to $6, and they also opened up pretty flat this morning at 0. But pretty much when I'm looking at these tickers, the main thing I want to look at is volume. If volume starts, aggressively increasing over the norm. So in this case, I don't know if you can see the number on the left-hand corner right here. You see 7.79821 million. It goes from a daily volume of 7 million. Then the next day, it goes to 50 million. And then it's steadily increasing 50 million, 50 million, 40 million before a huge volume pop of 100 million, which gives you the day where it goes from $34 all the way to 44. And it was a crazy day. You can see we entered. Where did we enter? We entered literally right here on Friday. We woke up in the morning, pushed up, came down, held those levels. And, as you can see, we were adding the $50 call over here and pretty much ripped all the way above our levels here that we had on the chart. And then earnings happened, as you can see, and, it failed upon earnings. And today it tried to push back up, but, the volume kind of died down, especially after the move. Usually after like a failed earnings move, you do see volume is pretty good, 70, 80 million, but it's all selling volume. But when I'm looking for these type of tickers, I'm charting usually mainly on the daily time frame. Especially anytime I see a setup where, it's a huge rejection and, it's coming to retest that same level. I want to see what the reaction is. As in this case, it turned the resistance into support, and we did push up very, very aggressively. How do you know it's only seller's volume? It's a red candle. See, red, green. I mean, how do I know it's selling volume also? Because it went all the way from 42 all the way down to 30. So sellers were in control after earnings. Today, some buying volume, but nothing too crazy. Why is the background blurry? Because my dog is just running around. Okay, so now that we're done with here, I do want to talk about SPX. So as you can see, SPX here, it's all coded in terms of each level is labeled just so it's easier for everybody to kind of understand. But if we take a look at the daily, I know you can't see anything, don't worry, I'm going to remove it. Okay. If you look at the daily chart on SPX, we all trade SPX, we all trade the market. So it's kind of important to understand these type of things. So if we're looking at the market, you can say right now, from 40.47 all the way to, 41.87, we've been kind of trapped in a range. It's been almost 40 days. We're approaching, the 50 days where we're pretty much just trading in the same range. We either, reject 48.87 or we hold 40.46, but it's pretty much the same kind of price action. We had a couple of fake outs here above this 41.87 where we thought, we were going to get a larger move in the market. We had one huge green day followed by a fake out where the market pushed back lower into the 4100s, and then buyers picked it up again. And we rejected that 42.31 level before dropping. And today we retested it, but we did reject very, very hard coming into the day. But when I am charting, when I'm charting something, when I want to know how I want to trade, I don't care what's happening today. I'm really looking at the most recent price action. So let's take an example like we didn't see anything that's happening today, and we're just focusing on what happened yesterday. So I'm taking the price action that I'm looking at what happened yesterday. So if we look at yesterday, market opens up, first couple of minutes right here, market opens up, we, test 41.95 before rejecting, very, very massive rejection. We drop down into 41.66, which is a really nice short trade. If you can see, 41.87 is the top of the range, the top of the 36-day range. So coming into today, we can kind of understand where we're supposed to trade and where we're not supposed to trade. So I saw yesterday, personally, between 41.78 and 41.66, it's chop zone for me. I don't like trading this. I don't know if you like trading this. You enjoy holding, through hours and hours of straight chop. And by the time the move actually makes itself, you're very mentally tired from holding over here. So you sell the trade very early because, this is kind of mentally tiring to go up and down, up and down, up and down before breaking out into the structure you want. So coming to the day, if you look at my game plan, I say, 41.78, 41.66. I'm not really interested in the market. I'm not interested at all in the market. Mainly I'm interested, above this 41.80, because at 41.80, I could take a really nice scalp towards 41.87. And usually, if it's happening at the end of the day, this is a good 60-70% trade on a few candles right here. I don't know if you were with me in VC yesterday, but this is the trade we took. We entered calls right here. See, call entry, Friday, triple bounce. We entered calls right here using the area below as a stop loss. Now, sometimes you get these fake out candles. We were on live together on VC, and I told you just wait for the other candle behind it to close to make sure. As you see, the candle closes above, and we hold and we trek all the way to 41.87. Now, coming into today, you can see that yesterday, if you were looking for targets, you take, the bounce of 41.87, your targets would be 41.87 and 41.95. And that's what happened. The market pushed all the way to 41.87, rejected, came down back to 41.80, pushed all the way to 41.95 before coming down right here. Now, let's before you start the day, ideal entry for calls you want to look at would be 41.95. The reason being is every time you see a level where there's a large reaction. What do you mean by large reaction? Like this, where market tests it and, immediately minutes later, seconds later, you get a huge kind of sell-off. In this case, a 14-point move in the last 10 minutes. All day long, it's chopping around for 5 minutes, for 5 hours. And then in the last, literally 15 minutes of the market, it rejects 41.95 and drops almost 15 points. This level to you as a trader should be important. This level is important, not only because, it rejected, but also because of the large reaction it had. Same thing, 41.87. You see the rejection, huge drop. 7-point drop might not look like a lot, but for an options, a 7-point drop in 1 minute, you guys know this is 100-200% fast, especially if it's by the end of the day. This particular case, this candle comes in at 150. So that this option, has 2 hours left to expiration, and it will go fast down 100%. And within this green candle, your profit will be kind of wiped out. But these levels where you see a large reaction on the candles, these are your golden key levels. Now, today, I'm teaching everything from a chart perspective because I forgot to record the tape. Usually, I have side by side and I show you both the tape and the chart. Today, I'm going to focus mainly on the chart perspective, just so you can see the overall outlook. Now, when you're looking at the chart, it's the candlesticks are lagging indicator for the tape, so it's the same thing. So the reason I like to also look at this is because this tells me on the tape there was a large amount of sellers, a large sell wall, selling pressure increases. I mean, it's a large drop right here. So coming into today, this is the main level, you should have been looking at. So we bought calls right here, a little bit early, but the main trade, where the sizing came in today. If you look at the profit and losses, let's take a look real quick, so you see what I'm talking about. If you look at today's profit and losses, for example, you see SPX 4180, which was the first trade. All my trades, I'm buying like 30 contracts. So, and I'm not really looking for much, but I do hold runners, but this is just the average sell. Even if you hold one runner and you sell one runner at 12, but the majority is sold at 9, it's going to go more towards the 9. So as you can see, I take 4180, then I take 4190, then I take 4200, and first trade up like 7,000 roughly. Second trade, I'm up 4,000, 2,000. I don't know. 7,000 again. So all the trades are pretty much up 7K, 7K, 7K. But let's look at the first trade, and then we'll go from there. So coming into today, I understand that this is my chop zone, and I don't want anything to do with the chop zone. Personally, looking at it, I don't like trading right here. I know we took calls right here. I took calls simply because of what I saw on the tape. But from a chart perspective, if you're looking at it, I don't want to trade in between here. So as long as it's under here, I'm not really interested in it. So off open, this is the first trade we took, 4180. We entered right here at the hold of the chop zone, and I had a how much was the percentage stop loss? 4180. Yeah, what did I say? 4180 at $6. Stop loss 5.5. So it was a very tight stop loss. Reason being the tight stop loss is because I'm still in this chop zone, and I just don't want to risk it, in terms of risk to reward. And with the first trim being $7, most will look at it, oh, he only trimmed, he's up 10%. In risk to reward, it's a 2-to-1. I'm risking 50 to make 100. That's 2-to-1 risk to reward. That's the reason, the trims were fast. And then again, half out was at 8, and then runners and everything was out at $9. From here to here, the 4180 went in the money, by almost $10. That's why we were able to kind of catch that move. We sold right here at 4187. The reason why we sold at 4187, same thing. We've seen the reactions 4187 has done to the market. Every time it's rejecting, we get a very large move towards 4180. We've seen how this 4187 multiple times throughout the week. I can show you other example. 4187 multiple times throughout the weeks. We see larger reactionary candles. So as you can see today, we push up 4187. What happens again? Large reaction candle towards that 4180, 4178. Now, from a bird's eye view, we got the perfect sell. It was an amazing sell. Even though the contracts ended up going all the way to $40 with a high of $52. It's not really the best sell. But from hindsight, because I have no idea this is going to happen, it's a pretty good sell because, we sold them at $9. They went all the way back down to $6 before pushing from $6 all the way to 38. But from a first trade perspective, it was the reason the stop loss was tight is because I was in a very tight position. This is where my chop zone kind of ends. And we've seen multiple bounces on my 4180. As you can see from here, multiple bounces. As you can see from here, multiple bounces to push towards 4187. So coming into today, that was the first kind of trade. 30 contracts took right here, 30 contracts exits was around here. We were all out. It dropped, it reclaimed this 4178, same entry we had, and then it reclaimed the 4180. As you can see here, it reclaims the 4180, pushes all the way towards 4194. Our second trade was right here at 4194. As you can see, you see where it says stop loss 4194.98. I was using this level as a stop loss because if it were to reject, like this candle were to reject and drop below here, I don't want to be in this trade because the last time we rejected this level at 4194, we dropped almost 14 points. The last time we also reject right here, we dropped almost 30 points. So this level to me is very important. You know, before this level used to be used as a support in previous days where it held here this level and pushed all the way to 42.12. So coming into today, this resistance flipped into support. You can clearly see the setup right here. We entered 4190, I believe. 4200, yeah. I had already entered 4190 over here. I did not signal that one, but right here is where we entered 4200 call. Again, our targets was 4203 and 4212. 4212, why? Because this is the area where last time we had a very strong reaction from holding the level. We pushed all the way to 4203. We pushed all the way to 4212. And again, this stock, what happens is right here, it uses the area as a support. Now, no audio. You can't hear me? Don't tell me you couldn't hear anything I just said. Okay, perfect. Perfect. So I get a lot of questions on this candle right here. See this beautiful candle right here? This is pretty much a fake out candle. Pretty much try to stop you out. You can see me here also in the Discord at 10:50. Let the candle close. It's still holding. The reason I say let the candle close, it's still holding. This was right here, 10:50. Same, this candle right here, 10:50, 10:49. I'm pretty much watching and waiting for this candle to close because sometimes what happens is these candles are designed to stop people out. There's no other way to put this, but you know, this level, you got to look at it from everyone's perspective. This level is a major resistance based on the most recent price action. All I care about is the most recent price action. You know, yesterday I care about. Tomorrow I will use what happened today to relay for tomorrow to kind of set up myself for tomorrow. But you know, this 41.95, everybody's watching it. That was where we saw the most aggressive sell-off from that level. Had we rejected here today, can anybody guess what I would have done if we rejected 41.95? What would you do, for example? Puts. Okay, good. Puts. We're on the same page. So had I rejected this 41.95, I would have shorted hard because I know based on what's happening in the past, basically the most recent price action. This is technical analysis. This is the study of what happens in the past to help you understand what happened in the future. And the most recent price action is showing an aggressive resistance right here. And not only a resistance, oh, it drops $1. It dropped $14 last night in the last 15 minutes. And in the morning, it dropped, as soon as it rejected, it dropped from 41.95 all the way to 41.60, almost 30 points down to the downside. So in my eyes, this level is a very important key level. So we take a trade over here, 4,200 call. You know, our goal is to push all the way to 42.03. Now, you know, it sucks when you're trading SPX because, you know, up here we were up how much percent at this point? We were up, it was $10. It reached 10.6 right here. You know, right here, you're forced to put a stop loss in profit. You know, there's really nothing you can do as a trader, you know, not to put a stop loss, you know, above a break even or at break even. You'd be pretty much technically kind of stupid when it comes to risk management. But, you know, these candles, there's nothing we can do about it. You know, this is where our runners got stopped out. And as you can see, you know, we proceeded push all the way up towards that 42.31. which was, if you look at it on the daily, from 10, give me 10 days. Days. Where did it go? 5 days. If you see this range, this 43.23, you figured it out pretty much. The last time we were here, we pretty much chopped and we dropped all the way down. Now, if you ever have trouble identifying the trend or understanding the trend, you know, I don't like using indicators, if I'm being honest with you. Indicators are not really my thing. You know, I don't like to use them too much. But if you want to understand and look for a trend, the 9 EMA and the 21 EMA, pretty much everybody knows these indicators. If you don't know, you know, now you'll know. But if you look at it on the 5 minutes, it's probably better to look at. The entire day, you know, the entire day, the trend was holding. You know, the price action was holding, riding the 9 EMA the entire day. The only way, you know, where it actually flipped is the last 10 minutes of the market. We closed under, we shot down, we held 42.12, and then we pushed up to close at 42.21. But the entire day, if you're looking at the chart from a chart perspective, there was not even one opportunity telling you to short the market. You know, if you're looking at it from a EMA perspective, there's nothing you can do. You know, you want to just ride the trend. If you're always unsure, if you don't know where the stock is going to go, up or down, you know, just take an EMA. You know, once it's like this, once it's like crossing, keep crossing over and over, like it is right here, where it goes up and down, up and down, up and down, stay away. Just know that, you know, the next couple hours is probably going to be chopped. Even as it's riding up, still kind of choppy. It's holding the both trends as it's pushing up, but it's not really the best environment to trade in. Today, on the other hand, it was a good environment because the entire time, the 5 minute was holding the entire way up. Even on times where it rejected, where it dropped down, it held the 21 EMA and kept pushing. These are all opportunities to buy dips on intraday calls as it's pushing up. All of these are opportunities until, you know, we reach here where we chop around a bit, we push back up, and then, you know, the trend flips at the end of the day and comes right back down to this. The trend is your friend. Don't ever short the trend. Do you still use VWAP? I use VWAP, of course, every single day, but you cannot use VWAP on SPX because it's an index and it has no volume. But I do use VWAP on SPY, of course, on everything else. Will there be a Q&A after? Yes. So when we're looking at tomorrow, we want to look at tomorrow. What level piques your interest based on the information that I just told you right now? What level piques your interest? Yes. Yes. Beautiful. Beautiful. 423, 4232, and 4212. Man, this is pretty much what's going on into the day. So tomorrow, coming off open, you know, if we hold above 4232, you're gonna probably look for, you know, a push towards, you know, that 4250 level. If we reject, we can look for a quick short towards down the 4212. If we reject 4212, it's just gonna go down 4203, 4195. You know, ideally, if we do reject this 42 level and this 4203, it's most likely gonna find support at 4195. So coming into tomorrow, using today's price action, the main levels I'm really watching is, you know, the high of range, 4232. High of range would also be the high of May 30th, which is where we rejected. We use it as support. We could potentially see a large breakout to the upside. We would officially technically be out of the range. Yes, out of this fucking 40-day range. I hope it breaks. On all honesty, at this point, I don't care if it goes up or down. Just give us direction. But we do have job claims coming up tomorrow. So looking at it from a different point of view is, if we hold above this 42.32 and buyers do step in, like let's say you take calls, for example, right here. Let's say you enter calls right here. If it were, to drop under and close under, this would probably be your exit to exit the call position. If it pops back up and holds back up, then you can kind of re-enter. The beauty about day trading, scalping, is you can always enter and exit. That's the beauty of what we trade. You can enter right here, you can exit right here. Then if it comes back again, you can enter. But if it does reject, you want to look for kind of a short opportunity towards 42.12. This will pay well. You take the 42.20, you ride it all the way towards in the money, you'll get 100% on a trade like this. And especially if it's at the end of the day, these went like 1,000% because it's the end of the day. But coming into tomorrow, this is the main level I will be watching. And, as you can see, I'll even change the color to gold just so I remember, as well as this level right here, I will be watching. If it rejects here, you'd be looking to short towards 42.03, 41.95. If it holds here, if it rejects here, holds here, then breaks this level, you probably want to look for entries all the way towards 42.50. All right. Does anybody have any questions for me? It's just a quick recap, nothing too crazy. Is there a recording? Yes, it's recorded. Did I record it? It's recording. Yes, I recorded it. It is recording, sir. Do you ever use your levels solely on the 1 minute time frame or use others? I like to flip between the 1 minute time frame and the 5 minute time frame. Reason being, I like to flip between the 1 minute and the 5 minute is because sometimes the 1 minute is just, it's so fucking bullshit. Like it stops you out so much. Like areas like this where, large candle kind of comes in, takes you out here at break even, and then the contract proceeds to go up 1,000%. You kind of get frustrated. On the 5 minute, we wouldn't have even been stopped out because if you had looked at the 5 minute, it held the trend the entire time. And it was a very strong push as opposed to the 1 minute, this same candle on the 1 minute, because the first 3 minutes of this candle were red, which is this one right here, it takes you out as a trader. So if you have them kind of side by side, if you're looking for more of a day trade, you kind of want to use the 5 minute. But also, if you're more of a scalper, the 1 minute is going to help you with probably earlier exits or earlier entries. Now, if you go in and out, yeah, you probably would have been stopped out right here, and then this was your entry, kind of re-enter and hold as the trend kept holding to the upside. Is there any reason why you didn't jump back into SPX after you sold the 4180s and SPX bounced back up? So yes, I did enter the 4180s, 4190, 4200. So coming into today, you have to understand, I opened my broker. I was already down $12,000 for the day. So coming into the day, I'm a bit on the emotional side of, I got to dig myself out of this hole. So I didn't expect to dig this fast, but within the first hour, how much was this? This is by 11:20, I had already digged myself out of hole and was up an extra 8,000. So from my perspective, I was like, damn, I just scalped $20,000 in 2 hours. I'm all happy, but I mean, looking at it in hindsight, I could have probably held and made way more. Probably could have made 100,000 if I had held all these contracts, because the sizing is 30 contracts. They went from $7, first one 41.80, went from 7 all the way to 52. You hold in 30 contracts at 5,200. That alone is I know nobody's gonna hold all the way till the end, but 30 contracts at 52,000, yeah, it's like 156,000. And then the next 3 trades after were the same exact. But for me, I don't really care about hitting home runs. My goal is longevity. It's risk management. I care basically about survival. Some days like this, I should have probably taken more risk instead of FOMO all the way at the end. But you know, I'll take a winning day any day over any losing day. So I as I started, playing with larger account sizes, my focus shifts from I want a home run, I want to, make 50, 60, 70,000. It's more shifted on risk management. How much can I keep? How much can I hold on cash? What is the risk to reward in this trade? The risk to reward on all four trades today were all like 5 RR. We didn't risk much. There was no drawdown. It went up immediately. So those trades are always nice to trade, but yesterday fucking sucked. Yesterday we took one trade and we took it right here. We took from here to here. This was our entry. See entry right here. We entered right here. It went up. This candle tried to stop us out. Told you wait for it to close. It closed. We pushed back up and we took this one trade. I think contracts went from, where did the contracts go? We entered at $6. We exited at 10.6. 10.6 right here. We exited at this fucking candle. So this range kind of sucks. I don't like it as much, if I'm being honest with you. But coming into tomorrow, the main levels I'm really watching is 4232, 4212. Again, if we do reject this 4212, as you can see, it breaks this entire structure that we've built right here. You look at it on the 5-minute, this 4212 previous level we did reject. We dropped all the way to 4203. Last time we rejected, we also dropped all the way to 4195. So looking at the day, these are the two levels going into tomorrow. I'm watching above this range. I'll probably take calls targeting 4257. Rejection of here. I'll probably look for puts towards 4203, 4195. If my target's 4195, I'm probably going to be taking the 4200 put. Reason being is if it goes in the money, I'll be in the money by $6 and I'll have more intrinsic value for myself. If it were to hold over here, 4231, ideally the best one to take would be 4250 if my target is 4257, because it will have roughly $8 of intrinsic value. But if you want better intrinsic value, 4240 would probably do you better, because it would immediately be in the money as soon as we break right here, and then it would be $10 in the money at 250, and then at 257 it would be roughly $17 in the money. So if you can get those contracts at 4, 5, or 6, you can potentially go from 6 to 20. Yes, what I'll do next time on the trade recaps, I'll record the tape so we can do side by side. This time, I was so focused on making money today, I forgot to record. I forgot to, I was like, I just want to get out of the hole. I usually just put my headphones on and I go brazy, man, when I'm trying to get out. But I actually trade a lot better when I'm down for some reason. So, I took very heavy size. 30 contracts is a lot. 30 contracts at $6. It's like $18,000 sizing. When you put your headphones on, what do you listen to, Nav? No, I actually listen to I listen to focus music on YouTube. Type focus homework music, and I just listen to that shit. So, and then when I'm green, I flip to rap and shit like that. So, but it's mainly deep work music, pretty much, just to be able to get out of. Because digging out of a hole is very hard. You're coming in very kind of emotional. Does anybody have any questions? Whether it's on what we talked about today or just in general about trading. Why does your profit losses show both long-term GL and short-term GL? Because we're trading SPX and it's taxed 60% long-term, 40% short-term. Yeah, 60 long-term, 40 short-term. It's showing you the tax brackets. What's your stop loss on Tesla swing? Because it's a swing, there's not really a stop loss that you can put. When is the next mentorship? Everybody wants to know. I don't know, man. You know, I'm thinking maybe in the summer. I don't know. I really have no idea. Really, I would say maybe midsummer, somewhere like that. What do you think about Nvidia for tomorrow? So Nvidia and AMD, we traded those aggressively last week. As you can see, all these levels right here, we've been in this from right here, from like 300. This was our entries for Nvidia. As you can see, it ripped all the way. With Nvidia and AMD, I'm not really touching it much now. I feel like it's overextended. I mean, like look at it. It's all the way at like 420. Like right here, I'm not really interested in Nvidia anymore, especially when I'm buying it right here. I was buying it at 300, at 290. Like we've been trading Nvidia from like 295, and then this is our runners, what we're holding for Nvidia. But we traded both Nvidia and AMD. AMD, we had 115 calls right here. Where did we enter? What price did we enter? What price did we enter? I think we entered here. Yeah, right here, 107. We entered and we rode it all the way up. Immediately on Monday, if you look at Monday's price action, this is Thursday, Wednesday, Tuesday. Yeah, if you look at immediately at Tuesday's price action, immediately you kind of see sell-off coming in, weakness on the market, and kind of a push down. When a stock goes up aggressively hard, like AMD has been doing for the past kind of 2 weeks, you want to give it some time to cool off. Especially if you didn't catch it from $80 to $100, then again from $100 all the way to 130, you kind of need to give it a little bit of a cool down. Now, if you look at it on the daily time frame, we come back down and we hold the EMAs, So technically it's still holding trend. You see this level 115.89, the trend will flip and then it will probably come down to fill this gap right here. But for now, both AMD and Nvidia, I feel like are both overextended. Now, don't get me wrong. Tomorrow, if the market goes up, they'll probably go up with the market. But for now, looking at it from this angle, the opportunity it provided at 107, the risk to reward was better. Now, unless you would enter here at 119.47 using, the 9 EMA on the daily as a stop loss, you could totally do that from a day trade perspective or from a commons equity perspective. Is it true you did the biggest trade in history on Amazon from 25K to 1 million one day? Do you hold the record for the best? I don't know. I don't think it's the best retail trade, but it was on three trades, 25K to 125, I believe, and then 125 to 600 and 600 to a million. I think so, something like that. It's posted on my Instagram. You can if you scroll all the way down to 2 years ago, you'll see it day by day posted. Will there ever be a RG meetup in the DMV? I'm always down, bro. I'm always down. Your birthday coming up. Thank you. Eric, who's this Eric Johnson? I like him. All right, does anybody have any why old trading partner when Nike? Can you comment on how jobless claims will affect market tomorrow, depending on whether above or below expected? So jobless claims, when it comes to SPX, you will see a kind of a reactionary candle at 8:30 tomorrow. I mean, it always depends how good the news is. There's really, when it comes to jobless claims, I don't know because it comes up every Friday anyway. So now will it trigger some huge long or huge short? Probably not. But at 8:30 you'll see the candle, and you'll see. Do you recommend IB car over TOS? I love IB cars filling more than TOS, definitely. Okay, send me your Discord. I'm jobless still, so it must go up. All right. Anybody got any questions for me? What I was gonna tell you is tomorrow, by accident, I will let everybody join the VC by accident. Don't tell Mitchell, but by accident. Tomorrow, I'm gonna let everybody join VC. So if you're a member or if you're not a member, check the Rippy Global. If Mitchell asks, it's an accident. So everybody can join tomorrow. Just click on Rippy Global Team VC. You'll see it. And I just got to figure out how to do it by accident, but I do it anyways. So does anybody have any questions, on anything? Make sure you edit this part from the recording. Appreciate the insight. My pleasure, Curtis. Appreciate it, man. Thank you for coming in. How do you use a stop loss on Interactive Broker? There's a tab. I have a video on it on YouTube. There's a tab. I would show you, but I'm banned from Interactive Broker, so I can't really show you anymore. Is it dandruff or white hair? This is white hair, my brother. It's white fox. Do you like to size light on Fridays? 100% like to size light on Fridays. I like to use just profits. I don't want to go into the weekend, pissed off. Break levels, are you looking on the 5-minute candle to close or mainly just 1-minute candle, lady? Seeing a lot of negatives and benefits to both. So I'm using them side by side. At certain key levels, like for example, 41.94, because I know the reaction is going to be aggressive, I'm probably using the 1-minute. At 42.03, I'm probably using the 5-minute because it's not a large levels. I'm into white foxes, baby. When are you going to upload another YouTube video? Tonight, right after the recording ends for this one. What time frame did you use for 417 today and yesterday to see that entry? Today's entry, 4172? Yeah. Okay. This one. Today's first entry right here. Where's my other chart? Let me pull it up, just tell you what I saw. I'm looking for my 417. Okay. For a small account, would you trade SPY, QQQ, or just an individual ticker with contracts lower for tomorrow? For smaller accounts, I would personally trade probably SPY or QQQ. Individual tickers will probably have less kind of emotions going into them. SPX, bro, it can make or destroy your account. So as a small account, I would focus more on trading on SPY. As you get good with SPY, it's the same thing with SPX. It's just SPX, I personally see it as a high emotional options ticker. Those options, they go up and down 20, 30, 40%. So, if you're in a $1,000, $2,000 account and you want to be on a risk management side, you will always probably end up, getting stopped out, especially if you're a $1,000, $2,000, $3,000 account on SPX. If you want to put a 20% stop loss, you're probably going to get stopped out more than you'll take profit. SPX is a little of a bitch, I would say. If you size it for 0, you don't have to hold it to 0, but if you size it for 0, your stop losses could be mental or your stop losses could be based on certain levels. So like when I'm at 41.95, I could use that level as a stop loss. Now the options contract, if it breaks under 41.95, regardless, it's going to go minus 30%, maybe even minus 40%. But, I'm using the levels, so my risk to reward is a little bit higher. My take profit would be on a higher level, so I can capture that risk to reward drawdown. Can I switch back to TOS if I'm more comfortable with active trader? What happened? Active trader. I like entering and exiting using your stream deck setup on IB Care, but I don't like that I can't control my entry and exit price as well. You can code the stream deck to allow you to enter at a certain price, like bid plus 2 cents, bid plus 3 cents. You can code it. You know what? With brokerages, I would say it's all about preferences. Some will tell you, use interactive broker. Some will tell you use TOS. When it comes to charting, I personally believe TOS has a better charting system. Interactive brokers charts suck. When you're charting interactive brokers, it's very hard. Interactive brokers has a better routing fill system because they route through a smart algo. So it's much better in terms of routing the order. I heard to never add to losing positions. Do you agree? Damn, bro. Whole thread on this fucking question. Yes and no. No, only for one thing. If I'm looking to kind of size in, you gotta understand, bro. I like buying. A lot of you guys are buying one, two contract. When it goes up, you sell. When it goes down, you sell. When you're buying 30, 40, 50, 100 contract, when you go 50 all at once, immediately the second you enter, you're down like 1 to 2,000, just right off the bat, because the spread is large and you're getting trapped by the spread. So if your goal is to kind of dollar cost average in, like for example, like right here, let's say you buy 10 contracts right here. You see it break up, you see it come down, you see it hold. You buy another 20 contracts right here. You buy another 20 contracts right here. You're slowly entering into the position as it's ranging, and then you sell them within the first pop. Technically, you're entering a losing position because as it's ranging, it's going -2, -5, -7, but you're slowly just buying the dips as it's pushing up. So if this is what you call a losing position, then I personally sometimes add to it, because when you're buying a large contract, you go in 100. The second you enter, you're down like 2, 3, 4,000, just because the spread went 10 cents, 20 cents. The play wouldn't have done anything, but it's just the spread. When you're buying market or you're buying limit. So sometimes I will average in, like I'll buy 10 over here, especially see this candle hold above and hold below. I'll buy another 20 right here. I see it kind of ranging, but holding my level. I'll add an extra 10. Sometimes they're losing positions, sometimes they're averaging down positions. But if your goal is to kind of dollar cost average into it, and then you cut it all under here, if you're going to cut it under 41.94, yes. But if you're not going to cut it and you're going to hold it and say, okay, it's going to go down to 41.87, I'm going to buy more, that's when you're adding to a losing position that has it's probably not going to come back for you. Like, for example, if I had added it right here, I'm adding, and then this candle kind of comes in where technically the setup is invalidated. And I start buying right here, buying right here. Yeah, I'm kind of adding to a losing position. But in this case, it's probably not a good example to talk about, because it does come back and it does shoot back up. But it all really depends where you're adding. So for example, if I'm adding right here and the market breaks below here, like this, how do I annotate? How the fuck do I annotate? I don't know how to annotate. Just imagine, goes under there, then yeah, it's a losing position, then I wouldn't add to it. But if it's still holding, it's still valid, it's following my plans, it's following my rules, then I would 100% add to it if you would entertain that as a losing position. That's the best broker, old school type. Yep, I use that all day. What am I hiding? I'm hiding my fat ass dog, bro, that keeps running around. He's sleeping right now, so I can unblur right now, but he's asleep. Blink twice if you're in danger. No blinking, I'm chilling. Best books for mental. Any recommendations that helped you the most? Yes. Where's my list? Books for mental. I have a list. Where did I put it? I don't know where I put it. What's your name? Best books. Chainsaw, are you in my Discord? Reply to the thing. Are you in the Discord or no? Okay, I'm gonna send you a list. I'll send you a list. I'll send you the list. Is it worth for me to pay Das Trader to read the tape? Because I'm really trying hard to incorporate it in the way you do, but it's really hard to read on TOS. Listen, when it comes to Das Trader, it is kind of an expensive subscription. It's roughly 150, $200. But if your goal is to trade for the long run, I believe it's a smart kind of investment to look at it from a future, because you're literally teaching yourself a skill. It's a new skill. So it's really up to you. How did you manage to get banned from Interactive Broker? Dude, I have no idea. I woke up one day, sent me an email telling me your positions is for closing. I called them. They said the compliance department does not have a phone number. And honestly, bro, I don't like to sit there on email back and forth. So I just closed the account and moved my broker to another brokerage. And they not learn the tape with the tool Jarvis made? Yes, they can. The tool is still not ready yet, but we're still working on it. Where can I see your current setup for DAS? I'm going to sign up for it. I have a setup posted on YouTube. DAS Trader setup. Rippy, if you were starting over today with only a few hundred and you had only enough buying power to buy one SPX SPY QQQ contract a day for a week, only making one move a day, how would you approach this to compound your account and get to $1,000 profit accounts? Actually, a fantastic question. Okay. I like this question. All right. Let's do this. Any lesson how to read the tape? I can make another lesson. No problem. How about I do that in the next class? Whenever I have a class. So, Emil, let's look at this chart right here. Can I call you? Can I have you on here so you can talk with me? Can I put you up here? Put you on the spot, or you don't want to? It's okay if you don't want to. Let me know if you want to, because I kind of want to bounce ideas off your head, and I just want you, of course. Perfect. Beautiful. I ask you to unmute. You can unmute yourself. What's up, brother? How you doing?
Yo, I'm on.
Beautiful. Awesome. I'm going to ask you some questions, bro. Just respond to them, and we'll go from there. So if today did not exist, let's say today still has not happened, looking at the market right here, which kind of level piques your interest?
Okay, let me look at the chart here.
From the chart right here in front of you, which level piques your interest?
I'm only seeing you. Are you on the XPX chart?
Yeah, you don't see SPX?
No, I see I see you, but I know the XPX chart. So, okay, here we go. I got it. I mean, like you were saying earlier, I'm definitely going to be looking at 41. Well, right now, okay, you changed it, so I'm looking at over 41.94.
41.94, right? That's pretty much the main level you should be looking at. Everything else right here doesn't fucking matter. Yeah. You have a small account, you have a small approach, you can take one contract. You want to be able to take a trade where you have, full kind of confidence taking the trade, where you can hold, because you can only buy one a day for a week.
Right.
So you don't want to take extra risk. You entering, in this zone right here, I'll be honest with you, I don't know if you can hold for a whole 2 hours, 3 hours of straight chop where it's going plus 20, minus 30, minus 70, plus 30, holding through here, this area, no trades. For you coming into the day, looking at what's right in front of you, I wouldn't take a trade in this zone right here. This zone right here as well, I probably wouldn't take a trade because look at the price action. You know, the price action, you know, today, for example, when we look today, where did it start getting choppy? It started getting choppy around here, around this 42.18, you know, 42.15 to 42.20. It started getting a bit, you know, choppy on this level before it actually kind of made its move. You know, as soon as it broke and hold this 42.20, then it pushed up. But usually in the same areas, you will find chop. Let's look at the market where it traded right here on this particular day on Tuesday. This sucks to trade. Yes, it is a downtrend, sure, bro, but it's going down $10, then it's shooting up $10, then it's going down $10. So it's the same kind of price action. You know, in this zone,
right?
Yes, on Monday, same price action. We go into Friday,
Right.
Same price action right here. So for me, right here,
Right.
bro, I don't trade, bro. It's not worth my risk to reward. It's gonna be a headache. I don't know if you can hold through this, but this is a headache. A whole hour, bro, from 12:15 all the way to like 1:45. You're literally holding red, green, red, green, red, green, red, green. And most of the time it's red because these candles are ruthless and the time theta is not on your side. You know, theta is playing against you right here. Until here, where it makes this huge move, then, you know, you start to make money. But right here in this range, it's chop, just like it was the day prior in this range. It was choppy. Price action is shit. It's not worth it. It's not worth the trade. Maybe at the rejection of 42.12, you know, where it drops down to 42.03, maybe this would be kind of a good kind of trade or a scalp. But for you coming into today, you know, the main thing you wanted to be watching is you wanted to be watching this 41. Where is it? 41.95. Where did it go? 41.95. Where is it? Damn, we went all the way back. 41.95. This is kind of your level you want to watch based on the price action. So today, if you were to take a trade, the only trade you were supposed to take is up here. You were to enter in this zone right here, using this level as a tight stop loss, had it broken under and held. Not this. This is a break, but an immediate reaction candle immediately comes to kind of pick it back up. This is kind of like a fake out. But in this area, in this zone, this is where you would have kind of bought your one contract. And, you know, you would have rode it up towards to here. If you didn't get stopped out by here, you would have kind of rode it all the way up. Coming into tomorrow, bro, are you going to trade from here in this range, 42.15 to 42.24? You have one contract.
I'm not even going to get a contract unless we break over 42.31 or break under 42.12.
Beautiful.
Pretty
That's
much.
That's it, bro. That's all. That's all you need to do.
I have a response to what you just said earlier about the 41.94 level. So what I do is because I've had a big account in the past, you know, I've been down since TCX days. So I've had a big account in the past, and I basically brought it all the way down to a small account now. When you're taking a contract that, let's say today, like you took the 41.80 and it's 600, I look at maybe 20 points out behind you. So I immediately, when you said I'm getting the 41.80, I immediately looked at the 4,200. Now, because of what we've been going through this whole week, I looked at 4,200. We were at 41.70 at the time, and I'm like, you know, that's a little far out. So at the time, it was like 9:38 a.m. Eastern time. That 4,200 contract was $1.50, so $150. So in my eyes, I'm like, it's exactly. But at the time, it was only 9:40 a.m. Eastern time. So I'm thinking, you know, it's not worth the risk to reward because that 4,200 is so far out, and you're getting a 41.80.
Yes.
So by the time we got to 41.94, now I'm looking at that. I'm mentally crushed because I'm looking at that 4,200 call that I passed up on for 150, and now it's at like 600. And now you're about to get the 4,200 that I was going to get. So now, so my response is, how would you be immediately looking at what, the 41.20, 41.40 now? You see, it's kind of hard for someone with a small account because you're like, damn, now I got to look out another 20 points, another 40 points out, and it's hard to believe it will work out when the
No, no, no,
whole
no.
week we've only
You're
had a 30-point range.
you're 100% correct in this, in especially when you're looking at it from a small account. If you had a
Yeah,
mid-sized account, what you would do is you would kind of roll up. So, for example, let's say I took 10 contracts of 4180, and let's just say for this purpose, let's see if we can do a share of a whiteboard. Why can't I share a fucking whiteboard on this fucking thing? I can't share a whiteboard for some reason on this Zoom. But let's say I take 10 contracts, and let's say I take 10 contracts 4180, and let's say I'm up $2,000. When I'm entering 4190 or 4200, as I'm rolling up, I'm decreasing my size. So first of all, I'm selling the 4180s, because now as it's approaching into 4190, 4200, it's expensive. They go into 15, they go 20. You don't want to lose that profit. You're up $2,000. You don't lose that profit. So what I do is I lock in the profit, and then I take a small percentage of the profit. So I'm up 2,000. And the next trade, I'll risk $1,000. So let's say I'll buy, 5 contracts with a stop loss at 30%. Let's say that is my minus 1,000. And I'll ride it all the way. It gave me another 100%. Let's say I make 1,000. The next roll up, I'm risking $500. If the last roll up fails and it goes to zero, I lose 500. But I made 2,000 on the first one. I made 1,000 on the first one, on the second one. So I'm up 2,500 because the last one failed. So I'm rolling with profits. On days where the market pushes all the way up, it's hard to hold 4180. Like those 4180s, like here, you want to look at the chart? Look, this is our entry, 605. We sold at 12, came down. I don't know if you can hold all the way to 52, man. I can't hold for shit all the way to 52. I'd rather roll into it. But if you can hold it, bro, all props to you. I personally, it's hard for me to hold these type of positions, especially when you're holding 30, 40 contracts. So I like to roll up as we're going.
Yeah. Yeah. Okay. Well, I appreciate you having me on, and I've been
My
down
pleasure,
since
brother.
I've been
My
down
pleasure.
since day one, so I'm gonna continue going, never quit, never give up. And to anybody else who's out there who's struggling, who may have had a big account at one point or just starting with a small account, it's all psychology and mental. Once you learn technical analysis and once you learn charts, from there it's just getting your mind right, because there's been plenty of times where it's like I've been in the right trade and I just didn't stay in long enough, and I literally could have changed my life again.
So let me tell you
it's all
something, man.
psychology.
Technical analysis, order flow analysis, scenario analysis, whatever analysis, that all can be learned. Risk management, unfortunately, has to be learned through trial and error. The only way you learn to manage risk is by getting fucked in the market. Like, let me just put it straight up honest. Like, I'm not gonna learn if I tell you, okay, don't full port your $1,000 account. You're gonna lose it. You're gonna lose it. You can say it 1,000 times. Like yesterday, AI, guys, de-risk the position, swing small. We're up 300%. De-risk. And then you get DMs. Hey man, I full ported. What was the outcome when you full ported? I lost everything. Well, I hope you learned a fucking lesson, not to fucking full port earnings, but what is it called? It's you learn through trial and error, like with risk management. And once you realize risk management is the key to all trading, because you understand, I'm here to survive long term. If I'm looking for home runs every fucking day, I ain't gonna make no money. So I'm only thinking I want to make 50K. I want to make 50K. I want to make 50K every day, and it's mentally hard to come in every day looking for a home run. If you're looking for a home run, brother, the casino's open 24/7. They give you drinks, they give you massage. Probably better to look for home runs in the casino than in the market. Our main goal is to survive. We've been trapped in this fucking range for 40 days. You know how many people blow their accounts during these ranges? This is designed for you to blow your account. To go calls, puts. You know what I did during the range? I took a break. Say, fuck it, I don't want to trade. You know, it's not worth it. The risk to reward is not there. You know, today it was there. You know, we broke the outside day of this 41.95 and we pushed up higher. But most days, like yesterday, the risk to reward is shit. I sat on VC for 6 hours, bro. We took a trade all the way at 1:30. We took our first trade. You know, so it's a bit difficult to kind of understand risk management. Like when you're looking at a chart right here. Okay, let's say for here, my entry is let's say my entry is at 4,200. Let's say I entered here 4,200 and my stop loss is 41.95. I'm risking five points. So I'm risking 5 points. My reward, what should my reward be? If my reward is at 42.05, I'm risking 5 points to make 5 points. You know? Right. Long term wise, if this is your risk to reward where you risk 5 to make 5, you need to be winning more than 70% of your trades in order to stay profitable. If you're always right. 1-to-1. You know, you need a large win rate to be able to stay profitable. But when you're going into a 2-to-1 where you're risking $5, you know, to make 10, so my target would be 42.10 right here. I'm risking 5 to make 10, or in this case, I'm risking $50 to make $100. That's risk to reward. Like when we entered right here. Look, we entered right here. Entry 6.5, stop loss 5.5. I'm risking $50. If the trade were to go wrong, I'd lose $50. My first trim is at $7. That's 1-to-1 risk. You know, not the best. My second trim is at 7.5. That's 2-to-1. I risked $50 to make $100. You should always be thinking, how can I risk 50 to make 100? Not how can I risk 300 to make 100? That's what a lot of traders do, bro. Right. They risk $300. Like when it's down, they're holding down 300. And as soon as it's up $100, he's all out. You know, you need like a freaking 90% hit rate to be profitable if all your risk to reward is risking 300 to make 100. You should always be focused, you know, if I'm risking 50, let me at least make 100. Because if I'm risking 50 and I make 100, from a risk to reward standpoint, from a risk management standpoint, you know, if I win 50% of my trades, still profitable. I don't have to have a high hit rate. With a 1-to-1, man, I need 70, 80% hit rate to make sure I'm always right.
Right.
Where's yeah. I have a PowerPoint. Where's my PowerPoint? Risk management. Where is it? Mentorship, mastermind. Risk management webinar. Where the fuck is it? I don't know where my PowerPoint is. Okay. I have a power. I think you know what I'm gonna do. I'm gonna do a webinar on risk management. I think it's really good to do a webinar on risk management. It's the most slept on topic when it comes to trading. Nobody really talks about it. But I think what I'm gonna do is the next class. I think I'm gonna talk about risk management. If you have a 5K account and you go 1.5K deep on SPY with 10 contracts, how many trims? How many would you trim at 15 to 20%? My problem is I always sell my winners early and accidentally hold my losers. So you're going 1.5K deep in SPY. Okay, so you're using roughly 1,500 divided by 5,000. So you're using roughly 30% of your account. You're using 30% of your account. If you were to put a 10%, if you were to put a 10% stop loss, you would lose 3% of your account. If you were to put a 20% stop loss, 500 times 0.20, 300 divided by 5,000. So you want to make sure your stop loss, you know, does not kind of blow through your account. So you know, with a smaller account, you do technically have to be taking, you know, a little. You're considered a bit more aggressive because these contracts are expensive. You know, SPY, SPX are very expensive. You know, for your small account. So a lot of times you will be taking a little bit on extra risk. But you know, if you're using 30% of your account to take a trade, you know, maximum your stop loss should be minus 20%, because if you stop out 20% on a $1,500 position, the max loss you will lose on your account is 6%, which is still a lot when we're looking at it from a percentage perspective. Like if you're looking at it from a net worth perspective, let's say my net worth is 100 grand and, you know, I take a trade and I lose 6% of it, I lose 6,000. It kind of sucks to lose your entire 6% of your net worth on one minus 20% trade. So ideally, in the beginning, you know, when it comes to SPY, instead of going 1.5K deep, if you go $300 deep, that way you can kind of hold the position. You have no kind of emotional attachment to it, because regardless, if you go put a 20% stop loss on a 1,500 position, you are going to lose $300 anyways. So even if the position were to go minus 20%, you would lose $300. But if you size $300 with a looser stop loss or a wider stop loss, you can hold to 100%, 200%. And if it goes, you know, minus 20%, it doesn't hurt you. You can kind of hold it. You know, if the setup is still valid, you can hold it. If the setup is not valid, you take a very tiny, small $80, $50 loss, as opposed to taking a $600 loss. Again, the goal is for you to stay longevity. If you can reload a 5K account, then you know, my answer to you will be different. But if 5K is all you have and you don't want to deposit more and your goal is to stay long-term, you want to size down. The smaller the size, the better, bro. Mentally. Your mental health capital alone is worth a lot. You know, you don't want to lose, you know, $600 on one of these stupid fucking candles where they try to stop you out and watch the position go all the way. So sizing down does help. What you can also do is you can size down the port to 1,500 and have 3,500 in your bank account ready to be deployed at any time. So you don't have that tight emotional attachment to the money. So I don't care what anybody says. Yes, you know, at the end of the day, we all invest money that we are willing to lose. But in the beginning, we don't want to fucking lose. You know, but in the learning process, you do, unfortunately. Losses come with the process. You know, everybody has a tuition price. Some is high, some is low. Some don't pay tuition. It's all really up to you, how you see it. Shabadu, bro, is a mentee. Trained past 3 months by me. It can hold. He knows how to read the tape. So he uses pretty good TA as well. He's done a few mentorships also in the past, so he has some experience, I believe. Does anybody have any questions for me? I know there's a basketball game you all want to watch, so keep it as short as possible and upload it to YouTube as well. I think what I'll do is I'll do the next webinar. I'll do a risk management webinar. Any questions? Going once, going twice. Any questions? I'll give you one. Jazakallah khair. Thank you, Habibi. Okay. All right, I'll give you guys 1 minute. What's up, Roy? Good luck on the talk on risk management for the future, bro. Beautiful, brother. I'll have you as well, Emil. Bring KKK on. So, where is he? KK. What did he say? $400. It was 149. I grew it back to 400. Trading penny. What team are you rooting for? How are their charts looking? Dude, I have no idea. I don't watch basketball, so I wouldn't even know. But appreciate you, Chainsaw. We need a webinar on tape reading. Okay. Give me 1 second. While I have you here. Jay, are you Jay Ortiz? No, you're Jay Ortiz, definitely. All right. Feeling. bro. Oh, you're not Jay Ortiz? Okay. Tape reading webinar. Okay. Tape reading webinar. What else? What else? Risk management webinar. What else? Risk management tape. I'm just writing them down so I can see. Can we do an on-demand trading session? On-demand trading session. Okay. Small account to big account webinar. Small account to big account webinar. Market scan, finding stocks to watch. Market scan, stocks to watch. Pre-market routine. My pre-market routine is funny, bro. Wake up an hour, 2 hours before market, and but it's okay. I'll do it as well. Been trading for a year and it's finally clicking, bro. Thanks for everything. It took me a year to read the tape, calculate options, TA, plan my setup, and execute. Been green this whole week. Beautiful, bro. I love to hear that, man. All de la Paz. Exactly who you are, too. Level system. Level system. But I can sit here and talk about levels. I get up at 6 now, thanks to you and Mario. How to choose correct contract before entering trade. Contracts to choose for entering. Wagyu carry session. I was actually writing that down. I was like, what? What else? What else? How to choose contract. What's the whole Who's KK, bro? Who's this guy? CO. Are you in the Discord, bro? CO. DM me, bro. DM me. DM me on Discord, bro. I got no messages right now. DM me. You laugh at all my Insta stories. I'll be honest with you, it's very, very hard to respond on Instagram, but there's like on a daily basis, it gets hectic. You should trade Forex and gold futures on Forex Broker. You'll cash out if you trade it like you do SPX. You see, bro, I spent the last, I would say the last 4 years, the first 4 years, I don't really count it. But I've spent the last 4 years trying to perfect trading SPX. I would rather be a master at SPX than average at Forex, average on futures, average on crypto, and average on SPX. I'd rather be, kind of focused on SPX where I could fucking master it and make it my bitch. Sorry for saying that, but I love SPX, man. I realized early on that I could make a living just trading SPX. Like at first, when I was first starting out, I realized, oh, I can make $100 a day trading SPX only. Without fucking. I used to on the side. I used to work insurance. That fucking sucks. Where you have to keep calling people and talking to them, which fucking sucks. And I realized, oh, with SPX I can make $150, $200 without having to, talk to people or work 9 to 5. It could like supplement. So I pretty much spent like 4 years just trying to learn how to trade SPX. And looking at it right now, 4 years down the line, why does it keep learning? I personally believe it was a good investment of my time. I warn every pro trader warns his mentees not to trade it. SPX is a skill. It takes time, but once mastered and done properly, the opportunities are kind of endless. but it does create degeneracy. Like there's really no way to put it, but it does create a lot of degeneracy. I won't be comfortable trading SPX until my 5 account is up to 10K because a lot of emotional stress for me. I would 100% agree with you, Pat. 100%. 2021, early 22 spoiled us with SPX though. I remember when Discord first started, it was different. Now only 30-point moves a day compared to 90 moves a day before. Yeah, man. 2020, 2021, 2022. That shit was, man, we took all those days for granted. Let me tell you, looking at the market right now, this shit sucks. But you know, think of it, look at it from this look at it from this angle. I mean, you're surviving the hardest freaking market in the past 10 years. Like this, it's hard, it's not easy. We range, we sit there for at the same price for weeks, months. So I mean, if you're still standing in this range, you still have a port, you still have buying power, technically you're chilling. A lot of your peers are liquidated. I can tell you, you should see my DMs. There's a lot of people that get liquidated during the range. They have no discipline. They have no patience. They're desperate and emotional to make money. If we can make it through this market, we can survive anything. Yeah, I believe it's the best time to learn. Definitely. That's actually why we added the RG Academy to the Discord, is because we wanted to focus also on signaling is cool and all, bro, but if you can't like take a trade on your own without a signal, then there's a lot of things you need to work on. Signaling is cool. Okay, cool. What if I die tomorrow? Can you take a trade? You gotta ask yourself, be honest. So that's why I kind of want to do more education webinars and educate. I suck at making content, but I can do webinars all day, no problem. Awesome. Anybody got any questions? Can you review Tesla 210? Sebas, in the beginning of the recording, I talked all about Tesla. I will post it on YouTube literally as soon as it uploads, and you can watch the review on Tesla. Breezy doing a great job, bro. Good hire. He's legit. Breezy was actually one of the first people to ever reach out to me. Phenomenal guy, stand-up guy. I've seen the growth on this guy. You got to give it up to some of these people, man. You see them grow from smaller accounts to medium-sized accounts to large accounts. And while they're growing, they're developing their strategies and their plays and their risk management. And, all it needs is not to give up, really. The only reason you don't do one ODT is because it's more expensive for everyone else. Yes. I love to do one DTE, but it's too expensive. Are break and retest one of your favorite strats? I love break and retests, yeah. I love rejections too. But it's all a discipline and risk management game. And I think that's what my next webinar is gonna be, discipline and risk management. I have a very good class on risk management. I can go for like 3-4 hours if I want to. Awesome, guys. Go watch your basketball game, and I will see you all Friday for live trading VC tomorrow morning. Awesome, guys. Have a wonderful day. I hope you learned something new or something, whatever it is. But I'll post this on YouTube, and we'll go over that. Shkur, Habibi. Love you, brother. All the best. Appreciate it. All day VC, yeah. You know what? If markets fire, you see me, bro. When markets fire, I sit there all day long. I don't really care. When markets, iffy like that, so that all really depends. Also, let me pause the recording.